Good morning. On behalf of Telecom Argentina, I would like to thank everybody for participating of this conference call. The participants of today's conference call are Roberto Noide, Chief Executive Officer, Gabriel Blasi, Chief Financial Officer, and myself, Luis Rial. The purpose of this call is to share with you the results of a 9-month period and third quarter ended on September 30 of 2024. If you have not received the press release presentation, you can call our Investor Relations office to request the documents or download them from the Investor Relations section of our website located at inversores.telecom.com.ar. I would like to go over some safe harbor information and other details of the call. We would like to clarify that during the conference call and Q&A session, we could mention certain forward-looking statements about Telecom's future performance, plans, strategies, and objectives. Such statements are subject to uncertainties that could cause Telecom's actual results and operations to differ materially. Such uncertainties include, but are not limited to, the effects of ongoing industry and economic regulations, possible changes in the demand for Telecom's products and services, the effects of potential changes in general market and or economic conditions, and in legislation. Our press release dated November 7, 2024, a copy of which was included in a Form 6K and sent to the SEC, described certain factors that may affect any forward-looking statements that could be mentioned during this call. The company has reflected the effects of the inflation adjustment adopted by Resolution 777/18 of the Comisión Nacional de Valores, or CNV, which establishes that the re-expression will be applied to the annual financial statements for interim and special period ended as of and including December 31st of 2018. Accordingly, the reported figures corresponding to the 9 months of 2024 included the effects of the adoption of inflationary accounting in accordance with IAS 29. In this presentation, we will also include figures in historical values which are easier to understand. The press release is complemented by an earnings presentation. Please read the disclaimer contained in slide 1 and slide 2 of the presentation. Today, we will go over our business and financial highlights and end the call with a Q&A session. Now, let me pass the call to Gabriel, our CFO, who will start with the presentation.
Thank you, Luis. Good morning and welcome to everyone. Slide 3 summarizes our highlights as of September 30 of 2024. Our main operational and financial achievements were: our EBITDA margin for the 9-month period was 28.8%. Thanks to our effective cost management and pricing strategy, we were able to maintain our margin in a year-over-year basis thanks to a positive trend in service revenues, while also right-sizing our operations. In our 9-month period of 2024, our CAPEX was approximately $383 million, equivalent to 13% of our revenues. The current focus of our CAPEX is on the expansion of our fixed and mobile access network, specifically developing our fixed FTTH network and 5G in mobile. Due to the real appreciation of the peso observed during the 9-month period of 2024, we registered a net income profit of 952 billion pesos, associated with real exchange differences gains included in our financial results. This is mostly generated by the effect of the market variables over our debt in US dollars. Our mobile subscriber base continues to grow, increasing over 3% year over year, and this quarter we achieved a growth of 0.6 quarter-over-quarter in postpaid. Mobile data usage measured in average monthly gigabytes per user has grown 16%. In broadband, our FTTH accesses keep growing rapidly, and during the last quarters they have contributed to keep our customer base steady. Additionally, we have achieved a growth of broadband ARPUs over inflation for the year-over-year period. Flow unique customers reach almost 1.5 million, increases 9% year over year. Our total subscriber base in pay TV has grown 2.5 quarter-over-quarter. Our fintech personal pay continues to grow, reaching more than 3.3 million onboarded clients as of September 2024 and achieving a relevant market position. During the 9-month period 2024, we present practically the same levels of leverage than over a year ago, as measured by our financial net debt EBITDA ratio, indicating the company's strong resiliency to FX depreciation. In October, we executed a successful retap of the 2031 notes, obtaining $200 million for the international market with a yield of 8.75%, almost 100 basis points below the original issuance 90 days ago, showing the strong credit profile of the company. Slide 4 shows the company figures for 2024. Telecoms revenues totaled almost $2.9 billion. Revenues measured in constant pesos decreased 10% year-over-year, improving the trend registered during the previous quarter and registering a real terms growth of 2.5% quarter-over-quarter. Our EBITDA amounted to almost $850 million equivalent during the 9-month period of 2024, while the EBITDA margin remained stable versus the same period of 2023. Telecoms mobile subscribers in Argentina amounted to 21.4 million, increasing in more than 668,000 when compared to 2023. Broadband and pay TV clients have totaled 4 million and 3.4 million respectively. Fixed voice subscribers, considering IP telephony lines, amounted to 2.7 million during 2024. Our regional operations remain very solid. We are the second most important player in the mobile market in Paraguay and in the pay TV market in Uruguay, with almost 2.5 million and 116,000 respectively. Slide 5 shows our pricing strategy during 2024. The accumulated inflation in Argentina for the first 9 months of 2024 was 101.6%, while year-over-year inflation as of September reached 209%. We continue to adjust our prices in a monthly basis during the 9-month period of 2024 in a very high inflation scenario. Even in a context where the year-over-year inflation remains high, we managed to have a positive evolution of our service revenues in real terms quarter-over-quarter. They have grown 2.5% above inflation versus the second quarter of 2024. Additionally, due to our successful pricing strategy, we have observed an important recovery of ARPUs in US dollars in most segments, where broadband and fixed voice have reached growth above the levels as of September 2023. Slide 6 shows the evolution of our products. Our pricing strategy has yielded positive results in terms of the evolution of our subscriber base, as we are also focused on minimizing the stress that price adjustment generates over them. In our mobile segment, we have observed a total increase of more than 668,000 subscribers, representing an increase of 3.2% year-over-year. This was mainly related with the good performance of our prepaid segment, where we registered a stronger customer recharge rate. We managed to increase our subscriber base for the 8th quarter in a row. What is more, our postpaid subscribers increased 0.6 quarter-over-quarter and 0.5 year-over-year. The participation of postpaid subscribers over total mobile subscribers is currently 38% of our total mobile customer base. In broadband, we have observed growth in FTTH accesses, while our HFC accesses have remained relatively steady. Our broadband subscriber base has registered a small decrease year-over-year, but the quarter-over-quarter trend has improved as we consider that our subscriber base is essentially stabilized. In turn, FTTH currently represents 20% of our total subscriber base in broadband. Currently, we have almost 800,000 accesses in this technology. In pay TV, our Flow platform continued to perform well, and our pay TV accesses have grown quarter-over-quarter. In the third quarter of 2024, Flow's unique customers reached more than 1.5 million, increasing by 124,000 total clients or 9% when compared to the same period of 2023. Pay TV subscriber base has grown 1.6% year-over-year, reflecting a substantial improvement in terms of the net adds, mostly due to the very good performance of our Flow Flex product. Finally, our fixed voice segment showed a reduction in accesses. We continue to partially replace the accesses in our legacy copper network with the new IP telephony accesses over our HFC and FTTH networks. Slide 7 shows the breakdown of our revenues. Service revenue totaled over 2.7 trillion pesos, decreasing 9% in real terms versus the 9-month period of 2023, showing a 230 nominal increase, mostly due to the price adjustment we performed. In the first 9 months of 2024, the participation of revenues in foreign currency, including our subsidiaries, over total revenues was 19%. Mobile represents over 40% of the revenues, while broadband and pay TV add up to almost another 40%. The rest is composed of fixed telephony and data revenues, representing 13% of our revenues, and equipment sales 6%. During this quarter, we have managed to increase our revenues in real terms versus the second quarter of 2024 in our 3 most important segments: mobile, broadband, and pay TV, reaching growth of almost 4%, 5%, and 3% respectively. Slide 8 shows our regional operations. Our operation in Paraguay continues with good performance. We count with almost 2.5 million mobile customers, which have grown 5% year-over-year. Our fixed broadband and pay TV offering in that country also continues to show good results. Our broadband and pay TV subscribers amounted to 308,000 and 112,000 subscribers, growing 16% and 7% year-over-year, respectively. Personal pay clients in Paraguay amounted to 176,000. This operation has a strong EBITDA margin of almost 50%, while remaining almost unlevered with a negative net EBITDA ratio of 0.15 times. Our operation in Uruguay is currently focused on pay TV, and we have 160,000 pay TV customers there. We have potential to grow in the local broadband market as we are obtaining licenses to offer the service in certain locations in the country. We have already obtained licenses to deploy broadband service in 5 locations in this country. Personal Pay has 3.3 million onboarded clients, reflecting a 113% annual growth. The platform achieved a remarkable increase in total payments volume (TPV), with increase 13 times, and a growth of almost 5 times in total payment number (TPN) when compared to September 2023, achieving pesos 291 billion in remunerated client account balances. Personal Pay holds the number 2 position in terms of balances invested in mutual funds in the whole fintech industry in Argentina, demonstrating both a solid market position and a high growth potential. Now let me pass the call to Luis, who will continue with the presentation. Thank you very much for your attention.
Thank you, Gabriel. In slide 9, we provide an overview of our main financial figures. Consolidated revenues grew by 225% in nominal terms during 2024, reaching almost 2.4 trillion pesos. When analyzing said figure adjusted by inflation, revenues amounted to almost 2.9 trillion pesos, showing a decrease of 10% in real terms versus the same figure in 2023. We increased our prices, but we also focused on maintaining our subscriber base, and in this sense, the lag versus inflation in our revenues is explained, among others, by the effect of certain discounts and promotions we grant after price adjustments to retain our customers in a strong competitive environment. This lag has been reduced 2 quarters in a row as we achieve growth of our revenues in real terms quarter over quarter. EBITDA increased by 239% year-over-year in nominal terms, generating a nominal EBITDA margin of 30.8% during 2024. EBITDA margin in real terms was almost 29%, remaining stable versus the 9 months of 2023. EBITDA margin in a challenging context thanks to our positive trend in service revenues. Slide 10 shows the evolution of EBITDA year-over-year and the impact of different components of revenues and costs. During the 9 months of 2024, the company was able to contain the pressure coming from inflation in most of its cost lines, and this has contributed to maintain the EBITDA margin at a stable level compared to the same period of the previous year. The main factors were the following. During the 9-month period of 2024, total labor costs contribute negatively to our EBITDA margin by 0.3 percentage points versus the same period of the previous year. This is explained by the increase in severance indemnities due to the right sizing of our operations during the third quarter of 2024. Excluding the effect of severance payments for the 9 months of 2024, which explains 1.8 percentage points of the EBITDA contraction, labor costs would have contributed positively by 1.5 percentage points to the EBITDA margin. On the other hand, other cost items such as commissions and advertising show a positive trend, contributing positively to our EBITDA margin. We also observed a good evolution of our bad debt ratio, which continued its favorable trend, representing 2.1% of total revenues as of September 30 of 2024 versus 2.3% in the 9 months of 2023. Slide 11 shows the company's net results and EBIT. Our EBIT increased in the first 9 months of 2024 as we registered lower D&A expenses. The operating margin during the 9 months of 2024 was minus 3.7% of consolidated revenues in real terms, and in historical figures, the same margin was about 24%. Due to the result of high inflation and stable effects during the 9-month period of 2024, the company had a net income of 952 billion pesos. These results are financially measured. The strong appreciation experienced by the peso in real terms during the first 9 months generated positive results, mainly in connection with our financial debt denominated in foreign currency. This led to positive exchange differences in real terms, which amounted to almost 1.7 trillion pesos during the 9-month period of 2024. Slide 12 displays a summary of the company's capex in PP&E and intangible assets during 2024, which amounted to almost 372 billion pesos, or an equivalent of $383 million at the official FX rate. This amount is lower when compared to the previous year in constant pesos. Our consolidated amount of capex for the 9 months of 2024 represented 13% of our revenues. Technical capex was mainly composed by investments in our access network and technology, representing 46% of the capex during the 9-month period of 2024. During the 9-month period of 2024, additionally, 64 new mobile sites were deployed, while other 1,004 existing sites were upgraded. We are advancing in the rollout of 5G. We count with over 100 5G sites working in the 3.5 GHz band, and we expect to count with 200 sites more as of the end of 2024. We are essentially adding 5G equipment to our existing sites, while additionally targeting the main populated cities of Argentina for a first stage of deployment. In our fixed access network, we increased the deployment of new FTTH over 8,800 new blocks, including the overlay over our HFC network. We also improved the upstream capacity of our HFC network by over 12,000 blocks. Approximately 41% of our capex for the 9-month period of 2024 was allocated to installations and customer premise equipment, or CPE, which are installations and equipment in the homes of our clients, and 13% to our international operations. Slide 13 describes our cash flow generation during 2024 compared with the same period of 2023. Our cash flow generation remained robust. It has been affected mostly by an increase in working capital needs due to the normalization of our commercial vendor financing after the restrictions to access the official FX market observed during 2023. The remaining components measured in US dollar terms have experienced little variation versus the 9-month period of 2023, and this is good news since the huge devaluation of the FX occurred in December of 2023. Our cash flow generation before dividends and interest payments was equivalent to $248 million. Slide 14 shows our key figures for 2024. The conversion to US dollars is obtained dividing the figures in constant pesos as of the end of each period and using the end of period spot effects for each year. Revenues totaled over $3.9 billion, showing a strong recovery to the same levels observed before the December 2023 devaluation. EBITDA for the last 12 months as of the end of the 9 months of 2024 was equivalent to more than $1.1 billion. Last 12 months EBITDA as of September of 2024 in US dollars increased by 54% versus the same figure of 2023. This important increase shows that the company has the ability to recover its operation profitability in US dollars and that it's resilient to FX depreciation. For the last 12 months, as of September 2024, our capex amounted to more than $900 million, representing 23.3% of our revenues. Our gross debt amounted to $2.7 billion as of September 30 of 2024. As of September of 2024, the company holds cash and equivalents for $348 million, and thus our net debt was almost $2.4 billion. In slide 15, we give more insight regarding the impact of the macroeconomic situation in our figures and net debt. Thanks to our effective pricing policy and the FX stabilization, we continue to increase our main figures measured in dollar terms after the huge devaluation occurred at the end of 2023. Our EBITDA for the last 12 months as of September 2024 was equivalent to $1.1 billion, while our net debt totaled $2.4 billion. In this sense, the net debt EBITDA ratio as of September 2024 was 2.2 times, practically in line with the levels observed before the December 2023 devaluation. In slide 16, as we mentioned before in the business highlights, in October we performed a successful retap of our 2021 notes that allows us to raise $200 million from the international capital markets at a yield of 8.75%, which means lower yield of 100 basis points versus the original issuance. This transaction will be debt neutral and will improve our maturity profile. As you might see in the charts of the right, thanks to the successful liability management strategy over the past years, illustrated by the exercises we performed during the last years and especially during the last quarter, we have been consistently improving the profile of our debt. The average cost of our dollar debt has increased below the widening of the 10-year U.S. Treasury yield, which means we have been able to mitigate recent increase in global rates. And we also managed to successfully perform liability management to maintain the average life of our debt in a range between 2 and 3.5 years. Slide 17 shows the breakdown of our debt maturity profile. As of September of 2024, our outstanding total debt principal amounts to almost $2.7 billion. This maturity schedule does not include the transaction we described before, as it has occurred during October of 2024. We currently have a very manageable maturity profile, and we have access to the official exchange market for all of our maturity schedule according to current central bank regulations. Looking at our upcoming maturities, you can see for the remainder of this year, our financial calendar is practically completed, meaning that remaining maturities are small and very manageable. We expect to continue accessing the local and international capital markets for our potential financing needs in the future, as we have been doing lately. And finally, in slide 18, we conclude with some final remarks and highlights for this period. We achieved a stable EBITDA margin in a challenging context. In fact, if we exclude some particular effects in our cost structure that we discussed during this presentation, the margin would have been about 30%. We managed to grow our customer base in mobile and pay TV and stabilize our broadband customer base in a very competitive environment. Our fintech personal pay is growing very rapidly with almost 3.3 million subscribers and is the second most important player in terms of remunerated account balances in the fintech market. We have shown resiliency in terms of our business model with a strong and quick recovery of top line and EBITDA figures measured in US dollars. The company's financial management continues on the right track. We have a solid and stable free cash flow generation before dividends and interest payments, generating between $300 and higher than $500 million annually during the last years, considering ordinary capex for each year. Our cash position is strong and it's mostly denominated in US dollars investments, allowing us to lower the peso volatility risk. And finally, through the liability management transactions we discussed, we extended the average life of our debt and improved our average financing cost. With this, now we are more than pleased to answer any questions you may have. However, before we start, we would like to remind you how you can address your questions during the Q&A session, which we will open immediately. Please use the raise hand button to let us know that you want to formulate a question. We will let you know when it's your turn to speak, and we will unmute you so you can proceed with your question. Thank you.